Welcome back to AlgoBot, your friendly guide to the world of automated trading on MetaTrader 5. I'm AlgoBot, and today we're taking a close, educational look at an expert advisor called order block structure continuation. This strategy comes from the Inner Circle Trader School of Price Action, and it works on pure market structure, with no signal indicators at all. Over the next few minutes, you'll learn how it reads swing highs and lows, how it spots a break of structure, and how it waits for price to return to an order block before joining the move. Let's get started. So what exactly does this expert advisor do? Order block structure continuation is an automated strategy built around three classic price action ideas from the Inner Circle Trader approach. The first idea is market structure. The EA continuously tracks fractal swing highs and swing lows, the turning points where resting orders, or liquidity, tend to sit. The strength of these swings is set by a parameter called SwingStrength, which decides how many bars must sit on each side of a pivot before it is confirmed. The second idea is the break of structure. When a candle closes beyond the most recent confirmed swing, the strategy reads that as displacement, a sign that one side of the market has taken control. A close above a prior swing high points to a bullish dealing range, while a close below a prior swing low points to a bearish one. The third idea is the order block and its mitigation. The EA looks back for the last opposing candle before that strong move, the down candle before an up impulse, or the up candle before a down impulse, and marks it as an institutional order block. It then waits patiently for price to retrace into that zone before joining the move in the break of structure direction. Notice what is not here. There is no oscillator, no moving average crossover, and no momentum signal. The only indicator used at all is the average true range, and it is used purely to size the protective stop buffer, never to generate a signal. This makes the approach well suited to traders who want to study how structure-based, price action logic can be expressed in clean code. It trades one position at a time, it tags each trade with a magic number, and it can be applied to any symbol and time frame in MetaTrader 5. Remember, this is educational information only, and like all trading, it carries real risk, and losses do occur. Let's walk through the logic step by step, exactly as the EA processes it. Every calculation that defines structure runs only on closed bars, so the strategy never reacts to an unfinished candle. First, swing confirmation. The EA keeps a rolling history of recent bars. Each time a bar closes, it checks the candidate pivot that sits swing strength bars back from the newest bar. For that bar to be a swing high, its high must be greater than every high to its left and right within the strength window. The same test, mirrored, confirms a swing low. When confirmed, the level is stored as the most recent swing high or swing low. Second, the break of structure. After updating swings, the EA compares the just closed candles close to the stored swing. If price closes above the confirmed swing high, that is a bullish break of structure. If it closes below the confirmed swing low, that is a bearish break of structure. Either way, the strategy now knows the intended direction of the next trade. Third, arming the order block. The EA walks backward from the break bar, up to order block search depth bars, looking for the last opposing candle. For a bullish break, that is the last down candle before the up move. For a bearish break, it is the last up candle before the down move. The high and low of that candle become the order block zone, and the strategy arms it in the break direction. That armed zone stays valid for a limited number of bars, set by order block valid bars, after which it expires if untouched. Fourth, mitigation and entry. On every tick, the EA checks whether price has retraced back into the armed zone. For a long, it waits for the bid to dip into the bullish block. For a short, it waits for the ask to climb into the bearish block. When price mitigates the zone, and no position is already open, the strategy places a market order in the break direction. Finally, the exits. The protective stop is set just beyond the order block, below it for longs and above it for shorts, with a small buffer sized by the average true range and the StopBufferAtr setting. The take profit is then placed at a fixed multiple of that risk, defined by the RewardRisk parameter, which defaults to 2. So the target distance is twice the stop distance. Only one position runs at a time. If a trade does not work out, the stop closes it, because losses are a normal part of any strategy. Now let's read the actual MetaTrader 5 code on screen, just as you'd see it in MetaEditor. At the top are the input parameters, the dials you can adjust before running the EA. Swing strength sets how many bars define a swing pivot. A larger value confirms fewer but more significant turning points. Order block search depth controls how far back the EA looks for the order block candle. Order block valid bars decides how long an armed zone stays alive before it expires. ATR period sets the look back for the average true range, which, remember, only sizes the stop. StopBufferAtr multiplies that range to give the buffer placed beyond the block. RewardRisk sets the take profit as a multiple of the risk, and lots is the fixed trading volume. Below the inputs is the heart of the entry logic. The variable G_OBDIR tells us whether an order block is armed long or short. In the long branch, the condition checks that the bid has fallen back inside the bullish block, at or below its high, and no lower than its low minus the buffer. When that is true, the EA reads the ask as the entry, sets the stop just below the block, measures the risk as entry minus stop, and projects the take profit as entry plus risk times reward risk. The order is then placed as a buy. The short branch mirrors this exactly. It waits for the ask to climb back into the bearish block, sets the stop just above the block, measures the risk, and projects the take profit the same distance below the entry. It then places a sell. Notice how the stop and target are always defined relative to the order block and the measured risk, never to a fixed pip amount. This is the price action logic, expressed in just a few clean lines. Let's watch the strategy in action on this illustration. On the left, price is drifting lower and carves out a swing low, one of those structure points the EA tracks. Just before the rally begins, there's a small down candle, and the strategy marks its range as the green bullish order block. Then a strong candle closes above the prior swing high. That close is the break of structure, telling the EA the market has shifted upward. Rather than chasing, the strategy stays patient and waits. A couple of candles later, price pulls back down and dips into that green order block zone. As the bid mitigates the zone, the buy entry is placed. The protective stop sits just below the block, and the take profit is set at twice that distance. Price then rallies and reaches the take profit level, and the first sequence is complete. Now watch the right side for the short. After the rally, price stalls and prints a swing high. The last up candle before the drop becomes the red bearish order block. A strong candle then closes below the recent swing low, a bearish break of structure. Again, the EA waits. Price retraces upward and climbs into the red zone, and as the ask mitigates the order block, the sell entry is placed. The stop sits just above the block, and the take profit is projected the same multiple of risk below. Price rolls over and reaches that target. In both cases, the pattern is identical. Confirmed structure, a break, an order block, a patient retrace, and an entry in the break direction. This is an illustration for learning only. Real markets are far messier, and not every setup reaches its target. And that brings us to the end of our look at order block structure continuation. Today we covered how the EA reads market structure through fractal swings, how it confirms a break of structure, how it arms an order block, and how it waits for mitigation before entering, with the average true range sizing the stop and a fixed reward to risk target defining the exit. Everything here is educational content only, and nothing in this video is financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like to see next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.